Good morning, everyone. First of all, I'd like to welcome you to the eighth webinar conducted by Baker Tilly. This webinar is focused on financial risk and fraud prevention during the times of COVID-19. As you all know, during these uncertain times, businesses have had to implement new ways of interacting with staff and clients. Adjusting to the new normal requires using IT tools such as webinars, platforms like Skype or Zoom that allow businesses to connect and ensure business continuity. The objective of this webinar is to provide key tips and measures on how to manage financial risk and fraud prevention. This webinar is being conducted by our experts John Milner, Pat Munoz, and Miguel Olmo. And before I give you a brief introduction on our panelists, I'd like to remind you to please keep your microphones on mute. And if you have any questions, the chat is active, so you can ask any questions that you might have during the webinar at any time. Our first expert is John Milner, partner at Baker Tilly, Mexico, specialist in GRC, which is Governance, Risk, and Compliance. Specializes in corporate finance and due diligence procedures. And John is an Irish chartered accountant with an MBA from the IPADE, which is a leading Mexican business school. He has over 25 years of international experience in finance and audit. He has held several finance director positions with international companies, where his experience ranges from strategic planning, corporate finance, treasury, financial planning, and mergers and acquisitions. On the other hand, we have Miguel del Olmo. Miguel is an audit partner and a corporate governance partner at Baker Tilly. He is a certified public accountant, and he has received his bachelor's degree at the ITAM. He studied a degree in tax and international financing reporting standards. So he also has certifications in CFE and GRC. And last but not least, we also have Pat Munoz. Pat has over 10 years of experience in forensic investigations and forensic accounting, fraud and bribery and corruption control. His investigations have mainly focused on fraud investigation and risk management, and Pat has also provided advice to government departments and agencies related to their fraud and corruption risk following major investigations. Pat is a certified fraud examiner and a certified GRC professional. I'm going to hand over control to John, Pat, and Miguel, who will be imparting the seminar today.
Thank you very much, Giovanna. Giovanna, I guess she's an international tax specialist. She works here in Mexico, but works with a lot of international projects with the London office and a number of different other countries. She was also successfully part of, we had a very successful international tax webinar a few days ago with a number of different countries, and Giovanna was part of that team. So as Giovanna mentioned, we've been doing these webinars. I think this is number 8 since we went into lockdown, which was, I think it was 19th of March. So we're in 5 or 6 weeks now in home office or in partial lockdown. The firm is completely active, and we probably have never been more active, very active with all of our customers. And obviously the way in which we work has changed. Hasn't been such a big impact for us because we're familiar with working with customers in this way, and we also have a lot of technological platforms which allow us to work this way. So as a housekeeping item, it's helpful if everybody could switch off their audio and video, because we've had sometimes the volume of people on the webinar can cause problems. So thank you very much. We're going to start off just giving a brief explanation or overview of where we are in terms of our current context. I think everybody is reading all of the news items that come out, whether these are in Mexico or internationally. Dana, sorry, can you help us with the slides? We have a graph here which came out of the Guardian on April 16th, which is it shows you the contraction in the European economies. Next slide, Anna. So you can see here we've got some, and this is information which is out of date. So you can see here the biggest impact are countries like Italy and Spain, which have been hardest hit by the coronavirus. But if you look at every other country on the map, it's Italy -9, -8% for Spain, Austria -7, and so on. And these numbers now are probably, all of them are probably over 10 or -10%. So it's going to be a massive, or it is a massive economic impact. Giovanna mentioned the new normal, because we're all hoping that this will end as soon as possible. And if and when it ends, or when we get to change, it's for sure we're going to have this new normal. There's going to be different ways of living our lives in terms of everything that we are used to doing. Just a number of some piece of data from the US on the next slide. They're probably already in the 20% unemployment. When we got to, we're talking maybe 6 weeks ago, like the first, second week of March, they were at 3.5% unemployment, which is historically lowest unemployment ever in the history of the country. And now I think we're in the 20% range, and it'll probably end up being more than that. So it's a huge impact for the United States, and also it's a big impact for Mexico and for the rest of the world. For us, it's such a big impact because we have such a dependence. We've got something like over 70% of our exports from Mexico go to the United States. So any downturn in the US is a major impact for us. Fortunately, they've had a number of stimulus. I think they're on their 4th stimulus package in the last month. And they're doing a lot of financial assistance to people, to employees, to people who become unemployed, to companies, large companies, mid-sized and small companies. So, and these relief packages are common in many of the countries to help kind of soften the blow. In the next slide, we look at some numbers on the airline industry. I believe numbers I was reading last week, there were flights in the US year on year. Dana, if we can move on to the next slide, is 94% down. So airlines were flying 6% of volume year on year. And the planes that were flying were occupying 10%. So for every, we'll say 100 people on the plane, there was like 10 seats that were being occupied. So a number of airlines continue to fly, basically because of necessities. You've got medical staff, you've got politicians, Congress people, and so on. So there are numbers of people that are still traveling. And obviously they have the social distancing with so many empty seats on the plane. Nobody has ever seen this before, where we're all used to getting onto planes and it's very crowded. And right now it's not like that. 2 days ago, Virgin Australia, it's part of the Virgin Atlantic, had a stakeholder in Virgin Australia. They asked for a bailout from the Australian government, but was refused. So they went into their version of Chapter 11. And so they're a huge carrier for that part of the world, which is Asia, Australia, New Zealand. And so there's obviously many other airlines in that similar situation. A lot of the airlines in the US have received packages from the government in the form of loans. Some of them are loans which are convertible into equity. So the government at some later point in time has an option of taking an equity stake in some of those airlines, which normally governments don't like to do. The webinar that I mentioned that we had with Giovanna, who she participated in, it was interesting to hear from our colleagues in Germany. For instance, Lufthansa The German government have issued they also have a financing program for their stressed, we'll say, companies or corporations, and Lufthansa have applied for that. And Adidas, it's the sports company, has also asked for, I think it's something like 1 billion euros as a loan from the German government. So you have this support out there, and obviously the airlines, a lot of the airlines have just got the planes parked. They're not traveling, and so they're in a very difficult situation. On the next slide, we're going to talk about Mexico, and I think we've all read about the price of oil and the effect that that's had. In the short term, it doesn't have a large impact on Mexico, because Mexico fortunately has these forward contracts, which Mexico has a number of years using these mechanisms for being able to cover their exposure, and they have bought in these futures, so they're able to lock in a price on the sell side because they sell oil, they export oil. But this is when the price of oil drops to negative. And why is it negative? Negative is a function of supply and demand, so it means that there's a lot more supply. So all the producers, all the countries that produce oil have just got gazillions of barrels of oil, and there's no demand. There's nobody driving cars. There's no. The factories have cut way down. A lot of the factories are closed, and the airlines are not flying. So, so having a low price of oil, in theory, should be a good thing. If airlines were to fly, airlines do the other thing. They do the opposite of what the Mexican government is. They also buy futures, but they're buying oil because what they try and do is lock in low prices. So this probably is good and not too good, because surely many of the airlines have already bought in futures at higher prices. So they're what they call out of the money. In other words, it'd be better for them to go out into the market and just buy oil, and they probably have already locked in these other prices. So it's a kind of swings and roundabout. It helps some people and not so much for others. So in terms of the next slide, projections, you can just see the speed at which the way things have changed. On April the 13th, the World Bank predicted a 6% drop in the GDP for Mexico, okay? On the 21st of April, Citibank announced a prediction of 9% for this year, okay? And as part of that, they suggested that it may go up to 10.5%, and also a drop in an annual 18% in exports, which is a huge number, and that private consumption will fall by 11.5%, and investment by 19.7%. So that was on the 21st of April. So yesterday, BBVA, they announced minus 12% of a reduction. So it's just uncharted territory, terrible numbers, massive negative growth, and there's going to be a big fallout for the economy in Mexico, for the companies. And so what we're going to talk about is we're going to talk about risks, financial risks. We also include in that fraud. Almost any risk has a financial impact. So we just felt it was relevant to, apart from financial risk, to include the risk of fraud and technology, because everybody now is so dependent on technology. We're all working from home. We're all on these webinars, Zoom meetings, etc. So there is a big risk in using these platforms. So we're going to talk about that today. So here in Mexico, we're now in this phase 3, which is almost a complete shutdown, whereby Dana, the obviously social distancing, stay at home or quédate en casa, or any events with meetings of people whether this is going to a sporting event, a convention, going to church, is closed down. Schools, offices, and only non-essential activities. And obviously, in this part, there's an expectation of saturation in the hospitals. So I think many of the hospitals have been getting ready for this and ramping up. And so the expectation is that Mexico was behind the US in terms of the upward curve, that we're still, the amount of cases are increasing, and the expectation that this will increase through April, May, and hopefully it'll start tapering off in middle of May or end of May. But that's really more over to the government and the doctors, no? When we look at the businesses that have been affected, it's interesting to see that this has been a good day, or let's not say a good day, Dana, in terms of it's been a very positive impact. Anybody who's in medical, pharmaceutical, drugstores, hospitals, clinics, laboratories, it's good and very good, and I think will remain to be very good for all those industries because of the importance of medical care and being looking after ourselves. Chemical manufacturers, anybody who's making these gels, cleaning liquids, towels, and so on, is also doing extremely well. Supermarkets, there's never been so much food sold. You know, everybody must be worried that we're going to run out of food, but apparently that's not going to happen. So I think the month of March was like one of the largest, I think it was the largest record for sales of food in history. So anybody who's in that business, supermarkets, food producers, distributors, probably logistically, it's good and bad. I think if you're in logistically, if you're in food, it's good. And if you're in, well, let's say luxury products, probably not so good. Online entertainment, Netflix announced their, like, just an incredible quarter. They just announced their first quarter for this year, and it's just a record. So they're doing very well because everybody's at home watching all these series and these movies. Technology, infrastructure, internet, security systems, online platforms, they're all doing very well. And then on the negative side, shopping malls are shut down. Shopping malls, unless they have a Walmart or a Soriana, Chedraui, that part is open, but all the other stuff is closed. Hotels, restaurants, just a terrible time for them. Airlines, we talked about. Real estate is stopped. A lot of the construction is stopped. And anything to do with conventions, sporting events is all shut down. So we're going to talk about, on the next slide, we're going to talk about financial risks. So we're going to talk about a very useful tool that we would strongly recommend for any business or organization is a 13-week cash flow. So 13 weeks is 3 months. So it's we obviously need to navigate this whole period. We should not forget about is after that what's going to happen. But obviously, the most important thing is to be able to navigate this period. So we stress the 13 weeks in terms of having a good management week by week, and also to go out to 3 months. There probably isn't much point right now in doing a detailed cash flow for September, October, November, because first of all, we need to get there to that part. Customer credit is important. We need to sell to people that are going to pay us, and we need to be careful in terms of the credit risk, market risk, mainly exchange rates. If we're buying in dollars, we need to be really careful because the dollar has appreciated against the peso. And if we sell in dollars, that's good news. So we need to be able to manage that. Debt, a lot of companies now are going into, companies who had a lot of debt coming into this is not good. Like a lot of the, for instance, a lot of the airlines are heavily leveraged already. So, so it's not very good to be able to navigate, because all of a sudden your business is collapsing and you have to deal with all this debt that you already have and probably take on some new debt as well. Technology, Miguel is going to talk us through that, and Pat related to fraud. So the next slide, a continuity plan. This is a kind of a 1, 2, 3, 4-step process where we do an assessment of where we are. The assessment, I'm sure we already did this. We look at different scenarios, and we have to, the scenario maybe 2 weeks ago, today has changed. So we need to be kind of updating it all the time. We need to keep our eye on the cash flow, prioritize payments, look at different scenarios, and obviously an action plan. And the action plan has probably already happened, and we need to keep our finger close to the trigger. We need to be all the time updating the action plan. The scenario is going to change. And also, we're not the only ones in this situation. We've got customers, we got vendors, so we're all in it together. And so we need to be completely aware of all of the variables, whether they're internal variables, external variables, and how they change. Just this morning, I got a message from someone that we know very well in Guadalajara, who are in the automobile business, and now they're going into massive production of face masks. So this was a company whose business was shut down. They had to shut down. And now they're doing face masks. So they have all of the platform, manufacturing, the capability, machinery, and so on. So that's a good example of where you need to, maybe they went on to plan B or plan C very quickly. And obviously continually monitoring it all the time. Okay. So on the first one, what we do is we prepare these assessments, scenarios, Dana. And the first one is the liquidity indicators, which we talked about. So we've got the 13-week cash flow projection, which we mentioned, maximize collections. It's really important. The cash needs to keep coming in. So we need to preserve cash. We don't have to hoard it, but we need to keep enough cash to be able to make sure that we can meet with our obligations. Flexible. We need to be flexible on our expenses. A lot of companies have a lot of fixed expenses that they're carrying. So what you can do is you look at different ways of trying to make these fixed expenses variable. So there are a lot of companies that have rent obligations, and they figured out that they can't pay these anymore. So they need to try and look for help from their landlords and see how they can make these expenses more flexible. There's also a lot of good ways with employees and payroll to have. It's important that we keep everybody motivated and obviously look for ways where we can preserve and keep on paying all of our staff, but sometimes we can look for schemes which were whereby maybe the fixed portion is less and the variable portion is higher. So everybody has an incentive to be able to continue their valuable participation in the organization. Indicators, we're going to go into that. I'm not going to spend much time on that because we're going to talk about a lot of those. Bank credit lines, it's important that we have enough lines to be able to keep us going, but we don't want to get into overstructured, or having too much debt either. Vendor credit lines as well with our vendors to make sure that our suppliers, if we are unable to pay our suppliers, we need to let them know. We need to be able to structure our debt payments in line with our collections. And the next one, which is the financial leverage, it's important here that if we need to, we negotiate with the banks. So if we have payments coming up in 15 days or 30 days, and we feel that we're not going to be able to meet those obligations, we need to talk to the banks and look for a different payment structure with them. Grace periods, a lot of the banks are offering periods whereby you don't have to pay capital, and also we may be able to get some help in terms of lower interest rates. On the dollar side, we talked about if we have, for instance, commitments in dollars and rent, we should have already spoken to our landlords and changed all those contracts to pesos. And also on the debt side, if we have dollar commitments, we should try and convert those into pesos. Also on the interest rate, if we're able to get some help from the bank, we should look for it and take it. On the next one, credit management, important that whoever we sell to, we're getting paid. If we have customers who are not good and have not been good in the past and are not people who are serious, we should be think very seriously about not selling to them. We should be selling to the people who are going to pay us. Customers will run into trouble. Communication. We need to be talking to our customers, to our vendors, just to make sure that, as I said, we're all in this together. So if they're running into the problems, we should be able to help one another. The idea is to put out incentives and maybe offer discounts for early payment. Credit assessment, we should have good lines of credit for our customers, not too much and not too low, and we need to be monitoring that all the time. Guarantees, maybe not the best time to be able to go out and get some really secure guarantees, but it might be possible always to get a personal guarantee from one of the shareholders or directors of the company, just to make sure that we have an additional security there. Talked about early payment with discount, close relationship with sales. It's vital that we work very closely with sales and marketing so that we're all basically singing from the same page, okay? On the next slide, on foreign exchange management, I would say there's probably maybe 3 ways to go. One is you do natural hedges. So if you sell and collect in dollars, you use those dollars to pay any obligations in dollars. And hold on to the dollars as much as possible, because right now the dollar is a strong currency, the peso is a weak currency. Okay, and it's, we don't have a crystal ball, and I don't have a crystal ball, but it is likely that for the rest of this year, the peso is going to be under a lot of pressure, and the dollar tends to be a safe haven in these times of crisis. So we separate the currencies, keep the pesos in one bank account, keep the dollars in a different bank account, use the pesos to pay pesos, dollars to pay pesos. And then when we talk about, there's kind of 2 ways to go in terms of covering the exposure. We've got what we call options, currency options. So these are similar to having an insurance policy on your car. In other words, you pay these amounts whereby you cover an exchange rate at a future date, and they're not so expensive as forward contracts. Forward contracts, whereas you have to lock in specific amounts for specific dates at a future point in time. So you would say, well, I want to buy $100,000 for the 15th of June at an exchange rate of 25.24. So when it comes to that point in time, we have to go out and actually buy those dollars at that point in time, or we can also just get out of the contract, but we would have to pay the difference. So I would say that options are a more flexible way of doing this, and that they're also, and you can pick your exchange rate. Like if you have an exchange rate which is higher, the premium is going to be lower, but it gives you this kind of comfort and guarantee that you can be able to, I suppose, sleep better at nighttime. So on the next slide, we're moving on to technology. Miguel del Olmo is going to talk us through this. Have we got Miguel?
Yes, thank you, John. Well, one of the things that you need to be very careful that we are doing home office is that in the past, all the problems with cybersecurity and technology, we have a team inside our offices that these guys are very good in that and provide it. But at this moment, as we are in our own offices, we are the IT people. We are in our computers, we have the information. Our modems are the firewalls that we need to be careful. So there are a couple of suggestions that we need to be very careful. First, update your system, your Windows system. Be aware that you need to be very secure that your Windows is updated in daily basis, because every day, probably every week, release new versions in terms of security. Of course, your antivirus, it's very important that you also have it updated. All your tools for communication, specific Zoom, they have a breach in security. But in 2 days ago, they release in the past, sorry, they release an update. So it's very important that be very careful. Also, in terms of technology, remember that we also can arrange, and probably it's going to change some process of insurance to avoid the risk in terms of cybersecurity insurance. It's complicated right now, but it's something that probably is going to change in the future. And also that the information is flowing in our laptops. It's very important that we very secure in terms of backups, recovery plans for send the proper information, that it's confident. It's very dangerous that we have only one place to have it in a proper and security backup plans and systems. And also another and the last thing that we need to be very careful is the information that we are receiving in our emails in terms of mails, spams, ransomware, and all that information. Please be advised that right now we are receiving a lot of information in terms of risk assessment, that people is trying to take information that is also a big asset of the company. So that's probably the important things that we need to be very careful. John?
Thank you, Miguel. I'd like to introduce Pat Patricio Munoz as our next speaker. Pat is born in Chile, but has spent most of his life in Australia. And Pat is an expert on fraud prevention and investigation. He, just to let you know, he worked with the South Australian Police Force, so he's an expert on asset tracing and fraud prevention investigation. So Pat's going to walk us through and talk about fraud in with COVID.
Thank you, John. Dana, can we go to the next slide, please? So what we're seeing in times of crisis, such as what we're going through now with COVID-19, the risk of fraud, corruption, unethical behavior increases. So Dana, can you just click onto the next point? So after the recession in 2008, there was an 80% increase in frauds. So everything is indicating that COVID-19 and the economic impacts are only going to be worse than that of the 2008 recession. So most likely there'll be an increase in fraud. So what this means is that companies need to be aware and put this on their radar. So any risk assessments they do need to have a fraud component. Hopefully there's a fraud and corruption specific risk assessment that companies are undertaking, and they need to be considerate that the risk of fraud is going to be a real risk to their companies. Can you go to the next slide, please, Dana? Knowing where your fraud risk is and knowing where you leak money. So the latest statistics from the 2020 ACFE fraud survey says that 5% of annual revenue is lost to fraud. So knowing where your fraud is, your fraud risks are, you can have a system to prevent, detect, and respond, which is the 3 pillars of good fraud governance. So we've got here fraudulent payments to third-party providers and partners known to the organization. So this might include inflation of invoices, invoices for services not provided, or invoices for goods provided that aren't up to standard. So one of the risks we're seeing at the moment in the market is the provision of masks. So masks for obviously to prevent COVID-19 and its spread. And we're seeing some cases whereby hospitals, medical entities are purchasing masks, but the masks they're purchasing medical grade masks, but the masks that they're being provided aren't medical grade. That's a classic example of paying for a service or a good and not receiving the good or service up to the standard. Fraudulent payments to staff is something that will be heightened. So in times of economic pressure, people rationalize their frauds. So we might see an increase in payroll frauds, especially now that people are work from home, maybe manipulation and falsification of their timesheets. We'll also see maybe false and fraudulent disturbance and gain an inflation of disbursements. And we might also see an increase in the setup of fraudulent companies. So paying third parties that you think are companies, but they're actually your internal staff. We've also got fraudulent payments to unknown third parties. So these are attacks from external parties. So like Miguel was talking about, might be related to phishing scams. So we're seeing a lot of phishing scams and CEO scams where emails are being received by clients advising them they need to change, that a client needs, sorry, not a client, a provider needs to change their bank account details and to make an urgent payment, and that is related to coronavirus. So with these emails, there's always a sense of urgency. Now, I need this now. That makes it impossible for people in, let's say, accounts payable to do the proper checks and balances that they would normally do. And they're also sent in a way that they're very general, and the grammar isn't correct, punctuation is correct, spelling is incorrect, because they might be coming from third-party entities that don't speak your language. In times of coronavirus and times of which we're living at the moment, corruption between personnel and third parties also increases. So now that we're at work from home, we might not be able to be as vigilant with regards to our third parties and with regards to our staff as we once were before. So this opens up an opportunity for corruption between personnel and third party. So like Miguel said, one of the risks that we're seeing is the sale of information to third parties. So one of the investigations I've conducted in the past involved whereby a competitor contacted someone from a company and said, I'll give you X amount of dollars if you start feeding me information about all the tenders that you're winning and losing. So now that we work from home, now that we don't have maybe the controls in place, maybe now people are using their personal emails to communicate rather than their work emails. Maybe there's no work from home policy. Maybe there is a policy, but it's not, hasn't been updated to reflect the current environment. Maybe people don't even know about the work from home policy. People now maybe are more inclined to be corrupted in that respect. Can you please go to the next slide, Dana? So what does this lead us to? This leads us to having a framework to prevent, detect, and respond to incidences of suspected fraud, corruption, unethical behavior, etc., etc. So a prevention framework is extremely important. You have policies and procedures that dictate what people should do in instances where they've been approached. Do you have a procedure for conducting investigations if something does happen? Do you have a procedure for training? So do you have a regular program of training to train your people on what is fraud, what is corruption, what to do if you're approached by a third party? How do you report fraud? Who do you report fraud to? How do you use the company to protect yourself, and how do you protect the company as well? What compliance leads me on to the next one? What compliance systems are in place? What checks and balances are in place to check that these things that are in place, these preventative frameworks in place are working? So are you checking to see if your outbound emails are going to personal email addresses that are unknown? Is there a spike in that regard? Are you checking to see if there's a lot of computer logins through your VPN, if you have a VPN, that are outside of your normal work hours, which you would expect? One of the classic data compliance checks that we suggest clients have is as soon as you let someone go, which I know there's a lot of companies that are letting people go at the moment. As soon as you let them go, you should be monitoring their outbound and inbound data. So what happens in times when people are let go is they start to download all the intellectual property of the company. They might be downloading schematic diagrams, financial information, list of clients, list of competitors, etc., etc. So it's important to have a system to detect what's being downloaded from your servers, especially with regards to people that you're letting go. A classic one here is segregation of functions. I know better as segregation of duties. This might be a little bit difficult for small, medium enterprises, but it's related to the idea that someone that approves a payment shouldn't be the same person that makes the payment. Now that we're work from home and now that we're becoming leaner in the way that we work, and we might be letting go of our, I'll put that in quotation brackets, non-essential staff, such as accounting staff, it increases the risk of that there isn't a segregation of duties. Use of technology to detect fraud is always a very important part of any anti-corruption, anti-fraud framework, because we can never prevent 100% of the frauds that are frauds. We can only mitigate. That means we can do the best to prevent fraud, but there's always going to be some fraud that's going to happen. So having a detection program. So that might be as part of your internal audit, or that might be employing specialist third parties, or it might be doing just a normal sample test of payments being made. So looking for duplicates, looking for providers that have very similar names, maybe checking the addresses of providers to make sure that they don't have the same address, maybe checking the providers, the address of providers against the addresses of all your employees on your payroll system, or maybe checking if some companies might utilize third-party providers a lot. You might be checking off their addresses against providers, against staff as well. Last but not least is the Ethical Hotline. I think the latest 2020 ACFE fraud survey suggests that 43% of frauds were identified through a whistleblower hotline, or ethical hotline. So without an ethical hotline in place, you won't be able to, you don't have an avenue for receiving those reports. So a lot of people don't feel comfortable speaking to their direct line manager about a fraud or suspected fraud. So they'll want to use a third-party ethical hotline to raise their concerns. Dana, can you please go to the next slide? So like John spoke about before, this is just a quick heat map. So this is looking at where you might be stronger and where you might be a little bit weaker. And in areas where you're a little bit weaker, you might want to consider refreshing what you have. And if you don't have something, actually implementing a policy and procedure such as work from home, which is something that a lot of clients are coming to us and looking at implementing a policy and procedure for work from home, and also having a quick training session with their staff in that regard. Thank you, Dana.
Thanks, Pat. That was great. What I'd like to do just before we move on is introduce Manuel Aguilar. He's our managing partner. I think Manuel should be online. If Manuel could just give us a few words.
Hello. Yes, thanks, John. Thanks for everyone connecting today. I see that there are some clients and friends connecting not only from Mexico, but as well outside of Mexico. Well, I think this is a very dynamic subject. The pandemic is changing and reshaping the business environment every day. And I think whatever we can share between us, with our clients in terms of how to protect companies, how to protect the businesses, it will be useful. For sure, there should be, our goal is that after you leave with this conversation, you have one or more ideas about how to improve your position. And well, you know that Baker Tilly is here for assisting you and for touching base with anything related to business here in Mexico. Thanks, John. Thanks, Pedro and Miguel, Pat, for this interesting conversation.
Thank you very much, Manuel. Also mentioned we've got our dear friend Agustin Mendoza, who's our partner, managing partner in Querétaro. So he's online, and thanks for being here, Agustin. The next slide is a very useful tool. It's a strategic risk map. I have a hard time reading it, so I'm sure you have a hard time reading it as well. So what we do here is we measure the probability and the impact. So if something has a high probability and a high impact of occurring, it's very red. It'll be up in the top right-hand corner. And obviously, if it's got low impact, low probability, it'll be on the other opposite end on the green side. So here, for instance, you can put up things like whatever are the more strategic and risks for your business, whether it could be currency, it could be cash flow, it could be forensic, all of the things that Pat mentioned, or Miguel, all of the other technology issues that we talked about. So we're going to finish up. We're going to get into a small case study, which is very financial. You don't really need to be an accountant to understand it, hopefully. Dan, if you can just help us to move on to the next slide. It's what we tried to do was to put together a case study which will sort of help us or help you to be able to guide through the current situation. So you've got a company which has got right now, or when this whole thing started, low profitability, gross margins of 40%, which was before expenses, highly leveraged, got a lot of debt financing, and it's got negative cash flows. So what we did was we ran this financial model. So we do that in the firm. We do financial modeling, and we put together a number of different scenarios. So for this company, which is probably very similar to many other companies in the marketplace, what they did is reduce prices and obviously drop margins in order to increase sales. So you can see a big kick up in sales, but obviously at lower margins. And then an aggressive plan with customers to be able to incentivize, like in other words, to give big incentives to get early cash payments to help the cash flow. And then on the other side, we moved out a little bit. Sorry, Dana, just go back. We talked to the creditors or the vendors and asked them, maybe we were getting 30 days credit, we moved it to 45, or we're getting 45 to move it to 60. So as much as possible, work with them. And also, it's interesting to note that if we do have excess cash flows, we can also turn around to vendors and ask for cash discounts with them. So we can sort of, if you have cash, that's good news, and you should be able to play with it and utilize it. This company had a lot of space, so they were able to negotiate and get some reduction in rents. And with bank debt, the banks right now, I think, are wide open to talk to companies, talk to their customers. They don't want their customers to go into bankruptcy. So what they did was they renegotiated out the bank debt, okay? So we're just going to run through a number of financial indicators. These are what we call, sorry, Dana, on the next slide, these are what we call key performance indicators, KPIs. These are basically financial tools to be able to measure. So on the one side, we'll say the current or the prior situation, and then the action plan. So again, we're utilizing the 13-week cash flow. So here you can see this has gone up by 13 weeks. On the left side, if you're able to see the colors, the gross margin is an orange line and expenses is blue. If we were to compare the left to the right, we could see that I had mentioned gross margins had gone down percentage-wise. So maybe instead of getting 40%, they're now getting 35%. But in absolute terms, which is in pesos, which is the more relevant tool to utilize, you can see on the right-hand side, gross margins have gone up considerably. And expenses, maybe it's a little hard to see on the graph, have also been reduced because of the rent and some of the other measures which the company took. But the most important thing, you can look at profitability. Companies are probably not used to measuring profitability on a weekly basis. I'm an accountant, so I don't want to talk badly about our accountants online, but accountants are used to doing monthly financial statements. So probably today we can't wait, because if we're looking for the results of April, we'll probably get them, the 10th or the 15th of May, but that's probably too late. So what we can do is monitor our sales, our cash, our margins, our expenses, and we can do a kind of a quick pro forma financial statement, which can help us. So as you can see from left to right, the company became much more profitable, because on the left side, you've got zero, and then you've got a lot of negativity. So on the right-hand side, the company has now become more profitable. It's got better margins, and it's also been able to reduce its expenses. On the next slide, we can see working capital. Working capital is vital, because basically here we're talking about accounts receivable. In other words, what our customers owe us, accounts payable, what we owe to our vendors, and our levels of inventory. So if you look, compare left to right, on the left-hand side, you see an awful lot of spikes. You don't really want to see accounts receivable going way up, which you can see. There's two big spikes, because what you probably want a closer relationship between one and the other. It depends on your business. You don't want to get into over dependency on vendors. Like, you don't want to have a big spike up in accounts payable. So what the company was able to achieve from the left-hand scenario to the right-hand scenario is there's a much closer relationship between accounts receivable and accounts payable, which is good, because it helps us better to manage the business. Because on one side, I've got customers who owe me money, and on the other side, I've got my vendors. Okay, inventory levels gone up a little bit, which we need to be careful about. We need to have enough inventory, not too much and not too little. If we run out of inventory, we're in trouble, and if we have too much, we're also in trouble. So we need to keep the balance. On the next slide, we can see how the behavior of cash flow and sorry, Dana, can you help us with the there you go, thanks. On the net cash flow, which is the orange, we've got a lot of negative territory below the zero. And on the right-hand side, we can see that the net cash flow has become almost positive. Like, if you go out to probably beyond week, except for week 6, it's negative, but beyond 7, 8, 9, it's positive. It dips again in week 10, and then it becomes flat. But the most interesting part is the cash balance. The bank balance is the blue line. And if you look from left to right, like on the left, it gets into negative territory, but on the right-hand side, it becomes very healthy, and we got positive cash flows. So that's good news. And these are only projections, so obviously they're going to change. And on the final one, which is typically when the next slide, Dana, typically in a financial accounting class, you probably won't see this one, but it's one that we like very, very much, is your bank balance as a percentage of accounts payable. That's kind of telling you, do you have enough money to be able to pay your vendors? So on the right-hand side, on the left-hand side, we can see that we're looking, I think, at 50 to 60% is our expectation, which is the red line. So you can see on the right-hand side, what we're hoping to have is that if we owe our customers, we'll say 100,000 pesos, we would always like to have 50,000 on hand. That's just a kind of a very rough financial measurement tool, which kind of helps us on a day-to-day, on a week-to-week basis. So on the left-hand side, you can see just terribly negative, and on the right-hand side, it's curving over 80%, 100% in the projection. So that's very, very healthy. So as we're coming towards the end, it'd be good if anybody has any questions that you could put them on the chat. The And obviously we're happy to answer them. And if today there's not time, we're obviously happy that you can send us to us. So I think that question is that if I have my customer in dollars and my vendor in euros, is that what let me see. What kind of strategy? There's one question which has come up from Amelia. Thanks Amelia for your question. What kind of strategy can we prevent the loss if I have US dollar, but my suppliers are in euros? So, well, we just need to watch it in terms of, we need to be paying euros so we can do options on those. We can do forward contracts. I would understand that my sales are in dollars. So if we're selling in dollars and buying in euros, we've got a currency, it's a hedge between the two currencies. So we just need to be careful. I know, well, I'm not up to date, but I know that the dollar has tended to be stronger, but I don't follow it every day. But certainly what we could do there is to, depending on our exchange rate, I would look first of all at our margins, because number one, our business is to sell whatever, Amelia, your business sells. So typically our business is not to make money. I would say it's not to make money on the currency, but try not to lose either. So if we have for instance, if we have a margin of 30% or 35%, and within a certain exchange rate band, we can get to that, we could just lock in the position. In other words, take out an option and cover it. And maybe we're doing, we've got margins of 38% and the currency option is going to cost us 2%. And that would mean that we're covered within the 35% range. So that would be my answer on that one. So thank you very much, Amelia, for your question. On the next slide, again, this is just a different way of looking at it. These were two indicators. It's a bit like driving your car. When you're looking at the level of petrol or gas, and you're looking at the brakes and so on, you got different lights that come flashing up. So this is what we would recommend that we utilize, are these financial indicators, a balanced scorecard that we can utilize. So these are just more of a friendly way of being able to look at this. The first one is a percentage of the amount of cash in the bank against accounts payable, which is at 114%. So you can see the needle is in green. And the one on the right-hand side is the bank balance, which is extremely red, okay? So to finish up, I believe there's one more slide, which is Miguel, who's we're gonna finish it up with technology.
Thank you, John. Dana, will you help us with the next slide? Thank you. Well, it's something that I already probably tell you, and it's related with the technology in our houses. That I remember, it's very important that we have all in terms of our spaces, in terms of our software, our modems, our laptops, have all the updated systems. But also, one of the things that probably I didn't tell you, but it's very, very important, is the septic way to see the things in this moment. Please be advised of every communication that you have, even if you think that you are receiving information from your bosses, from your vendors, from your customers. Be very careful with the technology, because we are seeing that there are some kind of hackers that go inside the computers and have information that is not only a general request of information in terms of spam. There are very intelligent right now hackers that go inside the email and request specific information that if you're not so careful, you can share assets of the company, very important, and in terms of that. So my strongly suggestions in terms of technology is not only the technology, it's the people that they are using the technology. Be aware, be very skeptic. Please do a double check. If you are not so confident that you are receiving in terms of a request of payment, request of information, and so on, please double check it. Take the phone, call your vendor, call your boss, and recheck the information that you are receiving by digital way. That will be, I think, the most important to take care in the COVID risk that we have right now. Thank you, John.
Thanks, Miguel. Well, I believe we're coming to the end. So if anybody has any more questions, we're more than happy to receive them. And also, I think we have our contact details on the next slide. If anybody would like to reach out to us, you have all the contact details there. And wanted to thank you all for joining us today. This was our first webinar in English, so hopefully it won't be our last one. And I'm just going to hand over. We're going to have more webinars we plan for next week and over the coming weeks. So I'm going to hand it over to Giovanna to finish up the call. Thank you very much.
So thank you everyone for joining us. Thank you for your time. I'd like to remind you to please follow us on Twitter. And you can find us at Baker Tilly, Mexico. You can also look at our social media. We're on Facebook, we're on LinkedIn. So if you want to receive notifications of any relevant tax updates, you can find it there. Also, if you would like to look at past webinars, you can find them on YouTube. And we'd like to invite you to the next two webinars that we have scheduled for this month. The one coming up on April 28th is at 10 a.m. and it is on any relevant legal aspects that you need to be aware of during the COVID-19 time. The other webinar that we have is at the end of the month. It's on April 30th. It's also at 10 a.m. and it addresses relevant issues on transfer pricing reports. So please follow us on social media, and then keep in mind that our webinars are coming up if you have any other aspects that you'd like to address there as well. Thank you very much for your time.
Thank you.